Welcome to the PayPod, the place where we discuss everything payments and fintech related. My name is Philan. I've been in the industry for almost 10 years now, 9 years. I've been all over merchants, and now I'm more on the payment side, more on the payment sales side. Alex, can you introduce yourself?
And my name is Alex. I've also been in payments for a long while. Actually, I think about 16 years now. I've seen the insides of a lot of companies, payment gateways, acquiring banks, PSPs, merchants, and a lot more, I think, as consultant. We're here to break down payment stuff and fintech stuff for you, explore new trends and news, and be on top of things every week.
You make me feel like a newbie. So let's just start with, pretty much where payments started, online payments started. It was with cards, and it was with credit cards. Did you know that actually the first credit card was introduced and it was created because somebody left their wallet back home while they went to dinner? So it was 1950s. It was a guy named Mark who went to dinner, and he accidentally pretty much forgot his wallet at home. And he was like, I don't want that to happen again. So he thought of ways for that not to happen again. That's how Diners Club was actually created, because he forgot the wallet in a diner. Funny story. From that point forward, that was the first time actually kind of use now, pay later was introduced in the very initial stages, where merchants were okay. Well, they started to be okay with clients using or clients eating at their restaurants and then paying at the end of the month. That was the very first start. Then in the next step would be around 1958, where Bank of America actually created BankAmericard. And then in the 1966, a couple of other banks created Mastercard, would later become Mastercard. And with all of those changes, there were a lot of there was a shift in the mindset of consumers where it became cool to be able to use those new cards. Yeah. Then it became for merchants. And that was the first time merchants actually were introduced to merchant fees, what we now know, and we can dissect in a later episode. And back then they thought it's super cheap. It was 7%.
7%.
What do you think about the 7% merchant fee back then?
7% is absolutely crazy. Can you imagine now you go to a restaurant and you say, well, guys, we're going to charge you 7%?
Yeah,
that's a no-go.
You will never, you'll be the worst salesperson with that kind of product.
Yeah. But can you imagine, the ticket size on this must have been really nice. You're a restaurant and you have only high-end customers. So these are the top restaurants in New York. And then you have to charge your customers, paying a 7% fee, very likely that's probably 1/4 of the tip that you're getting. So maybe it's okay.
Maybe it was okay, but again, it was accepted because it was, again, cool, but it was like the new way to do things. It was again for high spenders, like people that will actually be able to return the funds at the end of the month. But yeah, that's how everything started with cards back then. Then throughout the 60s and 70s, I think that's when imprinters were introduced, where you'll have to actually put the card in a small machine and just press paper on top of it. So it can pretty much print the card number and the card details. And that was created in 2 copies, one for the merchant and one for the end user. Well,
this is the receipt.
I guess that was the first receipt.
So they actually take the card and they put an indigo or something on top of it.
Yes.
And then what? On the indigo, the client signs.
Well, yeah, and those 2 receipts, one will be for the merchant. The merchant will have to collect those receipts. Each shift, they will have to collect the receipts and then go to the bank the next day. And it was kind of the first clearing system, because you need to go to the bank with those stack of receipts and then get those back. Get the money back. Sorry.
Yeah, but I think the paradigm shift here is that you shift, because I think before that was a common thing, right? You could have some kind of a credit with someone who you're buying from on a regular basis. So you could go to your favorite restaurant and you can tell them I'll come and I'll pay you at the end of the month. But I think the paradigm shift here was that you ended up with the result that if you're a diners club owner, you go to any restaurant that accepts this and you just say, I have a diners club card, and then you just eat and then you leave. And at the end of the month, it's not you settling your own bill, but it's the bank, and the bank guarantees that the restaurant is going to get paid. And then the bank figures out the money flow together with you. So either you have to put more money into the account, or they'll give you credit, whatever it is. But it's the bank. So it's no longer a two-way transaction. So it's not between the restaurant and the person making the purchase, but it's actually there is a third party in between, and that's kind of where the whole payments industry is coming from. This is actually why we wanted to have this this topic for our first episode, because probably card payments are the very foundation of modern payments and modern payment infrastructure.
They are.
Yeah.
Everything is based on the rails.
Consumer-based. I mean, consumer-based. Yeah. Because B2B is a different game.
We'll cover that in the next episode. But yeah, we're using the same rails.
Yeah.
They created in the 50s and 60s. With all the Google Pay, Apple Pay, it's a much better packaging right now.
Yeah.
It's much slicker and modern user experience, but it's literally the same rails that were used and created back then, like almost 70 years ago, which is insane.
Yeah.
Going through the history, the next step would be in the 70s and 80s. IBM actually introduced the magnetic stripe, or the black stripe on the back of our cards that we all know. We don't have that anymore out here in Bulgaria, but I know that's still used, I think, in the US, where that black stripe will just contain all of the basic details of the card. And so everybody will have to swipe it through the reader. You know the process. We know the process.
Our kids won't know it.
Our kids won't know it, yeah. I'll tell you a story about my kid later and how he pays nowadays. He's 5 years old. But yeah, that kind of initiated the whole globalization with Visa and MasterCard and diners, because now people can go pretty much everywhere and pay with the just swipe through the POS terminal. And then we're going to the 90s and 2000s, where it was the first time that the EMV chip was introduced, like chip and PIN as we know it. For the people that don't know it, that's was it Europay, MasterCard, and Visa. That's how EMV, that's what EMV stands for. And that was pretty much a microcomputer being put within the card, that small chip that we all know nowadays. Kind of the black stripes and the MAC stripes on the back was getting outdated, and they were super easy to counterfeit actually. And a lot of merchants were having a lot of issues with those, like with fraud. So the microchip was introduced back then with the chip and PIN. That increased the popularity of the cards and increased the trust that the end consumer will have with the cards, because now they became much more sophisticated, smarter. So that definitely increased the adoption worldwide. And then with the 2000 and 2010s, online e-commerce. We know the e-com boom. Then the card not present, transactions as we know it, and that pretty much created the backbone of the whole online payments and online e-commerce. So you can now purchase stuff from, if you're in Europe, you can buy stuff from, I don't know, US, China, Australia, wherever with your card, and it's super easy, super nice. When was the first time that you used, do you remember the first time that you purchased something online?
Online, that's a good question. It must have been, I think it must have been somewhere around 2008 when I moved to the UK to study there. And, even back then, there was such a big difference in the adoption of cards, especially e-commerce, but also card present in between Sofia, where we are, and London. Even then, cards were omnipresent in London. And now, if you go back to, I was in London just a month ago, and there's no cash.
Yeah,
it's
cashless
society. There's nothing else. It's just cards. And maybe here and there's a hipster coffee that allows you to pay with a QR code and crypto, but in general it's just card payments. So I think it was around then. But something else I think was kind of really stuck with me from what you said. It's tracing this kind of history of cards. There's and you spoke about the magstripe, where they were easy to counterfeit, and I think the reason for this is that they were fully analog. So you have some kind of identification number of the card, or as we know it, the PAN number. These are 16 digits that are imprinted on any card that you might have, digital, virtual, physical, doesn't matter. So this is the identification that you use for any card. And then you have the CVV, the 3 digits on the back, and you have the expiry date. And this is the combination of details that allow you to process a payment. And back then, as you said, with the magstripe, the idea was that the magstripe allowed the POS terminal to just read these, but there is no validation behind it. It's just you read it and then you say like, okay, Diners or Mastercard or someone else is gonna take care of it. So I don't care how, I'll just accept it. And then it turned into a problem, because the only thing that you had to do to counterfeit a card was to come up with a number that passes. I forgot what's the name of the test. There's a famous kind of test. It's a logical test of what the number should look like on the card. Doesn't matter, but it's kind of easy to crack. So and the idea is that I think the big shift came when all of this from analog became digital, and then you had the option to verify real time if this card, first of all, is a valid card issued by whoever the scheme is, or also if it does have balance, if it's authorized to make such a purchase, and many more. So I think it's the digitalization of cards that brought a very big difference to the market, and it's kind of interesting for me to pinpoint that. Have you researched like where in history this digitalization happened?
Around that time, like the 2000s, where the e-com boom kind of began. That's where the digitalization started happening. And then when we moved to the 2010s and 2020s, which was kind of 15 years ago, that's where kind of contactless and mobile payments became a huge thing, like Google Pay, Apple Pay. I think there was Samsung Pay. Not sure if Samsung Pay is still around.
Oh, it's around.
It's around?
There's Garmin Pay. So you'll be surprised. There's so many.
Okay. Yeah, I was not aware it's still around. But that's kind of like that area and that time was when everything became, as I said, digitalized, like full digitalized, and it was really nice packaging, really nice user experience. Everything was already like the ground has been laid to such a high standard, where now we are so much more looking into the user experience and why people would go and use Apple Pay, and why would they stop using their card to just get the card out of their pocket, tap it on the machine. It's so much easier to just tap your phone. It's just like, or your watch or your ring, or I don't know how many wearables can pay with how many wearables you can pay these days. But yeah, then we came around 2020 and 25, where tokenization is a huge thing, where everything is kind of tokenized nowadays. Everything is being digital. So because we're towards the end of this episode, the first episode, is I just wanted to ask you, how do you think things will move forward from that point forward? Where do you think cards will? Because we already know they're invisible nowadays. It's all tokens. Yeah. It's all somewhere on the web.
It's an interesting concept, but if you see like there's an evolution, and I think the evolution is going to continue, and we've been seeing this with tokenization especially. Now you have Apple Pay is a huge thing, Google Pay. You're no longer really using your card. Your card is something stored somewhere as a value, but in reality you're using your phone. And I think it's clear strategy. Both Visa and Mastercard have stated this very clearly. They're going the direction of everything going tokens and network tokens, so owned by Visa and Mastercard, and then other companies can also utilize these. So it's definitely, I think it's tokenization. I think everything is gonna go there, and we see it. How exactly it's gonna intersect with all the other things that are going on? Well, time will tell. But I don't think the journey is about to end. People have been saying for many years, cards are dying. Yeah. I don't think they are, but they're going to evolve. They're going to be different in 10 years, I believe.
I completely agree with you.
In the next episode, we're going to explore something more modern and interesting. It's going to be the agentic payments. Stay tuned. Thank you.